GM, everybody. Happy Wednesday, April 22nd. Welcome to another daily digital download. My goodness. We just keep making it out here, don't we, friends and family? Let me do a quick little TL post for the live stream. Just another day in crypto. I woke up this morning and I saw that, well, I guess I saw last night, but I woke up this morning and realized that there was another Kobe interview. And I'm a big fan of Kobe's, actually. I really loved Up Only. I quite miss it, if we're being honest. The layman's everyday conversations with Ledger, his co-host, and just hearing Kobe, a wise ass of crypto Twitter, a formidable leader, help share what we spoke about earlier in the week. Anyways, today's news is a little bit of the same as earlier this week, which I guess is good because that just means that we don't have another new hack. In government news, hold on, let me just do a little bit of this. In government news, we have, how exciting can government news be, really? Well, we have the Fed. Kevin Warsh was grilled by the Senate Banking Committee. Of course, Elizabeth Warren, Senator Warren, had all sorts of things to say, calling him what did she call him? A sock puppet for Trump. How embarrassing, eh? Are we still recording? Yeah, we're still live. Don't worry about it, folks. Anyways, why do we like Fed Warsh, Fed Chair Warsh, potentially? Well, if you're a crypto person, he holds tokens. He disclosed in his financial investments that he holds dozens of crypto holdings, including DYDX, Lighter, Dapper Labs, and Solana and Optimism. Warsh has also spoken a few times about crypto, calling Bitcoin an important asset that can help inform policymakers. Super, super interesting to have a person thinking like this at the Fed. And look, there's a lot to not like about the current administration, but if you're just wearing a crypto hat, I think we can be happy with what we've had. We had the Genius Act enshrined stablecoins into law last year. We have pro-crypto CFTC and SEC chairs, and now we could potentially have a pro-crypto Fed. Kevin Warsh has been nominated, and on Tuesday he was asked questions about interest rates, but also set the tone for how the central bank would view crypto should he become the chair. Senator Lummis asked Warsh, "Do you believe that digital assets should be incorporated into our financial industry so Americans have new investment opportunities and consumer protections?" Warsh replied, "Digital assets are already a part of the fabric of our financial services industry in the U.S. Look, just super cool, honestly, to finally have people who aren't trying to kill our industry, who aren't trying to kill the opportunities for folks to gain access to new and different types of markets. I don't know what else to say other than that. So that's about as much as I'm going to be talking about the government today. We'll find out, I guess, within the next week or two, whether Warsh is confirmed or not. There's a big battle between current Fed Chair Powell, Jay Powell, and Trump, largely over interest rates, which was what the majority of the Senate Banking Committee hearing was about yesterday. Anyways, yesterday I had the honor and the pleasure to interview Etherealize co-founder and CEO, Vivek Raman. And we spoke about an awesome report that the team recently released, which basically called for ETH's price to be $250,000 per ETH. How did they get to this magical number, you might ask? Well, combine the market cap of gold plus that of Bitcoin and divide that total market cap by the total supply of ETH. Voila. You now have $250,000 per ETH. Why Bitcoin? Why gold? Well, from Etherealize's perspective, they are going out and they're talking their book with Wall Street. And the best way to kind of like talk about the new opportunities that cryptocurrencies and digital assets have is as a hard money. And so this whole report kind of related to Ethereum as a hard money. And the definition of a money includes, let's pull this up real quick. Something that is scarce, fungible, divisible, portable, durable, verifiable, censorship resistant, and has an established history. The whole premise of the report was that ETH is a better money because if you implement principles that Warren Buffett adhered to, you also get an asset that produces an income and produces something. This is why Buffett never liked gold, because gold just sits there. It doesn't earn any yield. It doesn't drive any business value. It's just an asset that sits there. At the end of a century, you'll have a bar of gold, just like you started off the beginning of the century with a bar of gold. The whole premise of this report is after a century of holding and staking ETH, you'll have 1 ETH plus 2 to 4% each year that grew on top of that. And so that's kind of like, sure, the $250,000 price tag is gobsmacking. It's jaw-dropping. It's eye-watering. Who here wouldn't love to see ETH at $250,000? But I think the meat of the report was really the thought process that went into what differentiates Ethereum as an asset between gold and Bitcoin. And so core to Etherealize's argument is that ETH is both a store of value, like Bitcoin and gold, as well as a productive asset that generates returns due to staking returns. Etherealize wrote, ETH is the first monetary asset that compounds without counterparty risk, which Vivek and I spoke about is actually a big deal. A lot of folks in Wall Street are more concerned about counterparty risk than one might think. He went on, Etherealize went on to say, for all of human history, you had to choose to hold money, stable and unproductive, or invest into productive assets, risky and wealth generating. The two categories were mutually exclusive. Ethereum dissolves this distinction. And I just want to go on and quote Etherealize's Mike McGinnis. He said, everybody's just looking at gold's market cap and Bitcoin saying that's a 20x. You should be looking at Ethereum the same way because it's actually better money than Bitcoin because Bitcoin doesn't compound. So the report is awesome. It should be out soon or coming out soon. I'm very sorry that I don't remember the name of the website that the report is on. Maybe I can talk about it tomorrow. But I am super excited to share this podcast episode with Vivek because it was a fantastic conversation. Keep your ears to the ground. That should be out in the beginning of May. The KelpDAO exploiter is laundering more money. He has since laundered $80 million worth of Ethereum. Appears to have laundered 34,500 ETH since it moved roughly $175 million in ETH off of Ethereum on Tuesday. The freezing of 30,766 ETH taken by the Arbitrum Security Council actually served as an impetus for the hacker to move the rest of their funds. Ember CN, a sleuth, an internet sleuth, said most of the ETH was swapped into Bitcoin using cross-chain exchange on Thorchain. According to Thorchain's data dashboard, the protocol saw a swap volume of $394 million in the past 24 hours, making around $456,000 in fee revenue, which significantly exceeds Thorchain's usual volume of $10 to $35 million per day. Thorchain has received criticism in the past for not blocking or not freezing funds that were linked to North Korean hackers. However, the protocol maintains that it will operate with a strict hands-off policy. We talked about Thorchain yesterday. While I am a free market maximalist, a free market principalist, we also have to ask ourselves at what point do we stop letting pariah state actors steal hundreds of millions of dollars a year? I don't know the answer to that question, and I'm not going to pontificate on it either. I will, however, share a quote that Thorchain released. Thorchain was modeled after Bitcoin to be permissionless and censorship resistant. There's no single person or entity in control of the protocol. There's no admin key. There's no 2 of 3 multisig. Thorchain is neutral because the code is neutral and the nodes enforce it. So, unfortunate to see funds being laundered via Thorchain, which I think is a fantastic piece of technology. It enables layer 1 to layer 1 native token swapping. If you want to swap your SOL on Solana for your ETH on Ethereum, you can do so via Thorchain and not have to use a centralized intermediary, which is, I think, the true value prop of the protocol and of the ecosystem, the Thorchain ecosystem. That said, the North Korean hackers being able to launder money is clearly and obviously not the best look and not the use case that I would like to highlight for what makes Thorchain great. Speaking of crappy things that we have to think about, Justin Sun has sued World Liberty Financial over the WLFI token freezing and governance exclusion. Look, Sun is filing a lawsuit against World Liberty Financial in a California federal court after the team froze his WLFI tokens and made him ineligible to vote on governance proposals. Sun said, quote, "They wrongfully froze all of my tokens, stripped me of my right to vote on governance proposals, and have threatened to permanently destroy my tokens by burning them, all without proper justification." This is an insane story because Justin Sun was one of the earliest investors in World Liberty Financial. After his investment, weeks after, mysteriously, he got the investigation, the U.S. federal investigation that was looking into him, that was dropped, reeking of pay to play. But that being said, Justin Sun's investment into World Liberty Financial has tanked. He largely bought the token. The price of the token is worth pennies of what it was that he bought it for. I think it's down at least 80% or more. His $70 to $80 million investment is now worth $7 to $8 million. But he can't even recoup that because his WLFI tokens are frozen. In September last year, he tried to move a ton of assets from World Liberty Financial to his exchange. I don't know why I keep forgetting this. I believe it's HTX is his exchange. And when he tried to move his tokens, they were frozen unilaterally by World Liberty Financial. And he's since been in a deadlock with that team about those tokens. he's trying to convert 62.28 billion WLFI tokens. World Liberty Finance is seeking to convert 62.28 billion WLFI tokens from indefinite lockups to a fixed vesting schedule. Sun's tokens are a part of this. So we have multiple issues. A, Sun's tokens were frozen because he wanted to move them to his exchange. And then B, now he's trying to gain access to them, and he's basically being strong-armed to vote. The team wrote about their vote, tokens of holders who do not affirmatively accept the vesting schedule will continue to be locked indefinitely and continue to be able to use all of their tokens for participation in governance, subject to the terms of any future unlock proposals. Sun is saying that this isn't governance because if you don't vote in favor of this proposal, you don't ever get access to your tokens. Sun went on to say, for early purchaser tokens, the proposal imposes a 2-year cliff followed by a 2-year vesting schedule. And again, for those who do not affirmatively accept, their tokens are locked indefinitely. Sun went on to say, and honestly, I think this is where we can all agree with Justin on this. All I want is to be treated the same as every other early investor who received tokens, no better, no worse. All we want in crypto is to be able to get a fair shake and access to freer markets where we can all participate on an even playing ground. And for that, I can't believe I'm about to say this. I am aligned with Justin. I feel for him. He's been wronged. And every single person should want to be able to fairly participate in markets. And look, even if he made a deal with the devil by buying tokens from World Liberty Financial, and maybe if there were these other external factors that were associated with why he did that, that still doesn't mean that he should be strong-armed out of being able to use his capital and his assets the way he wants to. And that doesn't mean that he should be treated unjustly. Sure, not all of us own, top exchanges where we can migrate tens of millions of dollars of a token and potentially mess with the tokenomics of that platform. But I'm not going to sit here and feel bad for World Liberty Financial. The team recently used WLFI tokens, which are illiquid and terrible capital. Just look at the price depreciation of the WLFI token over the past year or two. They used a large majority to take out a gargantuan loan on Dolomite, a borrow and lend platform that was built by an advisor to World Liberty Financial. And then they took out a $70 million USD1 loan on Dolomite using illiquid WLFI tokens, increasing the utilization rate to 93% on Dolomite. Meaning that once the utilization rate is at 100%, nobody will be able to withdraw the capital that they're lending on Dolomite because it won't be there. There's a lot of shenanigans going on here. And as my friend on Twitter, Hasib, said, and I agree with him, I've never been rooting harder for Justin. Moving on to some technical news. Coinbase is launching the Azul testnet. Azul is blue in Espanol. It's the first standalone network upgrade with mainnet activation targeted for 3 weeks from now, May 13th. The Azul upgrade will introduce multi-proofs and a new client stack, which the network is calling its first independent upgrade ahead of the May 13 mainnet activation. Azul revolves around a multi-proof system that combines trusted execution environment, or TEE, with zero-knowledge proofs. Either proof type can finalize a proposal on its own, while agreement between both can reduce withdrawal finality to as little as 1 day. It also said permissionless ZK proofs can override permission TEE proofs if the two conflict. Look, I'm a big fan of ZK. Trusted execution environments are great until the environment is put at risk. It's nice to see the redundancy of these two. It's honestly going to be unique. The base networks system is going to be unique and something that should be studied, and honestly something that will be iterated upon moving forward. That's my guess. That's my hot take. You heard it here first. We're going to see other networks that implement this TEE combined with ZK proof system. Azul is making the base Reth node the network's sole execution client. So they're going to one client, which I think the emerging conversation with AI and quantum computing is lending towards a more singular client environment as opposed to a multi-client environment, simply because you want to be able to dig deep into one client and make sure that all potential bugs are squashed before a malicious actor gets to them. The new consensus client is based on Kona and will be part of a broader effort to raise performance and streamline operations. This is a key step for Base, which was originally built on the OP stack, because it's trying to harden its infrastructure while moving closer to stage 2 decentralization. Stage 2 decentralization is real decentralization. You're not dealing with a sequencer that could just be shut off by a company, and whoops, once the sequencer is gone, there goes the ability for the L2 to rely on the state of the Ethereum L1. No, with stage 2 decentralization, there is no centralized entity that can impact the operations of the L2. The Base team also noted that most applications won't need to change anything, even though node operators and developers using specialized features may need to prepare ahead of the activation. So if you're building on Base, go reach out to them. Find out if you need to do anything for Azul. Lastly, Base has a hefty stablecoin market cap with $4.98 billion in stablecoins and $4.4 billion in TVL on DeFi, which makes Base one of the largest Ethereum scaling networks and a major hub for USDC liquidity. So in terms of L2s, this will be an interesting one to watch unfold. Keep your ears to the ground for the next 3 weeks to hear what Base has to say, and of course on May 13th to hopefully see a smooth network upgrade. Best of luck to Base in their forthcoming ventures. Network upgrades are always scary. GSR, a market maker, has launched, is launching or has launched. No, they did launch, excuse me, their crypto Core 3 ETF. This is a super cool ETF because it includes exposure to Bitcoin, Ethereum, and Solana, which I would argue are the 3 blue chips. With Solana, maybe just being on the border of blue chip asset. Why I like this strategy. First of all, GSR has been investing more and more into blockchain infrastructure and competing with incumbent traditional financial companies. And also expanding beyond its market-making vertical through the acquisitions of things like Autonomous and Architect to flesh out its token advisory business, as well as investing into tokenization platforms. But I like the GSR Crypto Core 3 ETF, ticker BESO on the NASDAQ, largely because, and this is a great quote, Core 3 answers 3 questions every crypto investor faces: what to own, how to earn yield while you hold, and how to be positioned as markets evolve. I honestly believe that if anybody is getting into crypto for the first time, the first thing they should buy is Bitcoin. If they continue to be a little bit more curious, they should probably buy Ethereum. And if they're still going down the rabbit hole after both of those purchases, Solana should be the next thing. Bitcoin has the staying power. Ethereum and Solana have the ecosystems building on top of that blockchain network, and the assets also earn yield. So I really appreciate and think this is a great ETF. If I were to talk any of my risk taking family members who love equities and crypto, if I were to talk them into looking into any fund or ETF, I would probably go point them at BESO. Honestly, lots of news coming out about GSR over the past couple of weeks. They made an announcement about getting involved in the Ethereum economic zone 2 weeks ago. So hopefully we can get them on the pod to get them to chat about what they've been up to. This is a gargantuan article, so I'm not even going to read it. I personally didn't even read the whole thing ahead of this recording. I just really wanted to point it out that there's another Who is Satoshi documentary, another documentary unmasking Satoshi. It's called Finding Satoshi. I've actually heard good things about this one from respectable individuals in the Bitcoin sphere. Nick Carter and Jameson Lopp have both said that they've seen the docu and that they thought it was good. I'll probably watch it myself. Finding Satoshi is the name of the documentary, and it makes the case that Hal Finney, RIP, and Len Sassaman, RIP, were Bitcoin's co-creators. They both passed away 12 plus years ago. Len in 2011, I think Hal in 2014. I'm not sure. But the film follows a 4-year investigation led by New York Times bestselling author William D. Cohen and private investigator Tyler Maroney. So, if you're interested in watching a documentary about who might Satoshi be, check out findingsatoshi.com. And then our last piece of news to all of our friends in France. I hope you guys are staying safe out there. This is just another case of a wrench attack on French citizens. 2 armed intruders broke into a French family's house and made them transfer $820,000 in tokens during an invasion. This is more than 40 times this year this has happened in France. Wrench attacks. There have been more than 40 crypto-linked kidnappings or abductions since January, after about 30 cases in all of 2025. So we're not even 4 months into the year, and there's already 25% more kidnappings and abductions in France that are crypto-related than last year. 2 hooded men with a firearm extorted a family, where 3 adults were bound and forced onto the floor for more than 3 hours while the assailants demanded access to the family's token holdings. And the mother eventually complied and transferred the funds. In the house was a mother, her 2 young children, and 2 grandparents. What a sad, sad event. The French judicial police have recorded more than 40 kidnappings and abductions since January. Like I said, exceeding more than 30 cases that were documented in 2025. Look, really sad, honestly. If you're a French citizen, take care of yourself. If you hold crypto in France, figure out. Honestly, actually, not even France. We're getting to a point where if you hold crypto, you should probably have it all stored off-site, off-house, which goes against the tenant thesis of crypto. Not your keys, not your coins. But like, at what point is your physical security worth your philosophical ideology? Yeah, that's my call to everyone who's watching this right now. Go re-examine your practices. Go make it super difficult to transfer your crypto. Make it super hard to exist at your house. start examining bank-like services where via multisig you can have your assets stored offsite and elsewhere. Because if you get your home broken into and someone puts a gun to your head, you're going to want to have a type of protection that doesn't allow you to move your crypto. It's not even like you're lying and you can crack with the threat of your life or your safety being imposed upon. If you really legitimately cannot move your assets in a fast manner, you're protecting yourself and your wealth. So yeah, this is a call to examine your safety practices and your hygiene, honestly. And maybe as an industry, we really should be convincing more and more people to not have their assets stored at their house. Anyways, folks, that is it for today. Thank you to everybody who tuned in. I really appreciate you. If you haven't yet, go subscribe to our weekly newsletter, thesmarteconomist.beehive.com. We use these daily digital downloads to help craft the newsletter. And I have begun testing the signal of what we talk about being different than other key industry thought leaders and individuals with good insights that I view to have good insights. And so I'm really curating these newsletters to provide information that you're not getting from other thought leaders. Not that I'm a thought leader or anything like that, but if you're watching this and you like to read a weekly What Happened newsletter, I'm trying to provide something for value for you. So with all that said, folks, thank you so much for tuning into the Daily Digital Download for Wednesday, April 22nd. I appreciate your time. I appreciate you. And thank you for being here. Thank you for being in crypto still. Thank you for checking out our daily live stream. It's for you that I put these on every day. And I really appreciate the audience who watched this live and in the future. So until tomorrow, guys, be safe and take care of yourself. Peace.